Did you know that there's a system running the world, controlling everything from prices to energy to government policy? And no, it's not the banking system or stock market. It's the petrodollar. For over 50 years, it's been shaping our world. So what is the petrodollar? To understand the petrodollar, we first need to understand why oil is so important. We use oil to fuel our cars, planes, and ships to transport people and goods around our countries and around the globe. We use it to make plastics. In some countries, we use it to produce electricity. We even use it to manufacture chemicals, fertilizers, and many other everyday products. Our modern economy depends on oil for basically everything. Because oil is so important, countries are constantly buying and selling it. Some countries produce a lot of oil, like Saudi Arabia. Others use a lot but don't produce much, like Japan. This creates a massive global oil market. So how did the US dollar come to control this global market? To understand this, we need to go back to World War II. At the end of the war, while most of the world lay in ruins, the U.S. emerged with its economy and manufacturing base intact. This led to countries agreeing to make the U.S. dollar the center of the global financial system at the Bretton Woods Conference of 1944. This would be a new world order backed by the U.S. dollar. The U.S. promised that its dollars could be exchanged for gold, and so other currencies tied their currencies to the dollar. But in 1971, President Nixon decoupled the U.S. economy from the gold standard. This was known as the Nixon shock. This transitioned the world into a fiat currency economy rather than a gold-backed economy. Fiat currency is government-issued money that isn't backed by a physical commodity like gold or silver, and instead gets its value from public trust and economic stability. After the U.S. stopped backing dollars with gold, the dollar stayed dominant because the U.S. economy was so huge and the U.S. government was considered to be stable. Also, many global transactions were already done in dollars, so the dollar became what's called the world's reserve currency, meaning countries hold large amounts of it in their central banks. But in 1973, the world experienced the OPEC oil crisis. This was when Arab oil-producing countries stopped selling oil to countries supporting Israel in the Yom Kippur War, including the United States, in order to gain political leverage. This caused oil prices to quadruple, leading to massive shortages and severe inflation in Western economies. In response to this, the U.S. made a major agreement with Saudi Arabia, one of the world's largest oil producers. The deal was simple. Saudi Arabia would sell its oil only in U.S. dollars. In return, the U.S. would provide military protection and support. Since Saudi Arabia was the largest of the oil-producing countries, the other ones soon had to follow suit. This meant that you needed U.S. dollars if you wanted to buy oil from most major producers, no matter where you were in the world. This system is what we call the petrodollar system. But there was a secret ingredient to that 1974 deal that most people don't know about. The U.S. didn't just offer aircraft carriers and fighter jets. They offered Saudi Arabia a financial backdoor. The U.S. Treasury allowed the Saudis to buy U.S. government bonds outside of the normal public auction. This meant Saudi Arabia could park billions of dollars in American debt in complete secrecy, without the market knowing how much they held. This was the carrot that made the deal stick. And here's the crucial twist. When a Japanese company buys Saudi oil, those dollars don't actually go to a bank in New York. They go to what's called the eurodollar market, a shadow network of dollar deposits held in London, Singapore, or Zurich. This is the hidden plumbing of the system. The U.S. Federal Reserve doesn't control the interest rates on these offshore dollars. This market is actually larger than the U.S. domestic money supply. The petrodollar doesn't just make the U.S. dollar strong, it creates a massive, unregulated credit machine that the world runs on, but that Washington doesn't fully control. Now, here's the big idea. If every country needs oil, and oil is sold in dollars, then every country needs dollars. Imagine you're a country like Japan. You don't produce much oil, but you need oil to power your economy. To buy oil, you must first get U.S. dollars. Second, keep dollar reserves ready. Third, trade with the U.S. or hold U.S. assets. This creates constant global demand for the U.S. dollar. And that demand gives the U.S. major advantages. It keeps the dollar strong because everyone needs dollars. It allows the U.S. government to borrow money more easily and at lower interest rates. And it means the U.S. can use financial systems like sanctions to influence other countries because so many international transactions go through U.S. banks. In simple terms, the petrodollar helps keep the U.S. dollar at the center of the world economy. Economists call this America's exorbitant privilege, the ability to print money that the rest of the world has to use to buy energy. But there's a dark side they don't always mention, the exorbitant burden. In order to supply the world with all those dollars, the U.S. has to run a massive trade deficit. That means America has, over decades, exported its manufacturing base and accumulated trillions in foreign debt. Is the petrodollar a privilege or a trap? The answer is both. What happens to the oil money that the oil-producing countries receive? They don't just store piles of cash, they invest it. This is called petrodollar recycling. For example, oil countries invest in U.S. government bonds. They buy American companies. They invest in real estate and global markets. This means the dollars often flow back into the U.S. financial system. But this recycling loop has a very dark history. In the 1970s, Western banks were flooded with Arab petrodollars. They got greedy and lent that money recklessly to developing countries like Mexico, Brazil, and Argentina. When U.S. interest rates spiked in the early 1980s, those countries couldn't pay back their petrodollar debt. This triggered the Latin American debt crisis, a lost decade of economic collapse that still shapes the political instability of that region today. The loop isn't always smooth. Sometimes it's a chokehold. It becomes a loop. First, countries buy oil with dollars. Second, oil producers earn dollars. Third, oil producers invest those dollars back into U.S. assets. And fourth, the dollar stays strong. Now, this is where the title of this video becomes deadly serious. If you don't understand the petrodollar, you cannot understand the last 30 years of war and foreign policy. Because the U.S. doesn't just benefit from this system, it defends it. There's a historical pattern you need to see. In the year 2000, Saddam Hussein's Iraq switched its oil sales from the U.S. dollar to the euro. Shortly after the 2003 invasion, the U.S.-controlled Coalition Provisional Authority switched Iraqi oil sales back to dollars. Similarly, before the 2011 NATO intervention in Libya, Muammar Gaddafi was pushing for a new African currency, a gold dinar, to sell African oil outside the petrodollar system. Now, I'm not saying these were the only reasons for those conflicts. Geopolitics is complex, but if you're a student of geopolitics, you must acknowledge this correlation. Challenging the petrodollar is historically correlated with regime change. It's the red line of American foreign policy. If you don't know this, you're watching the news with the sound off. So what's the future of the petrodollar system? In recent years, some countries like Russia, Venezuela, India, and Pakistan have tried to trade oil in other currencies like the euro or the Chinese yuan. This is one of the goals of the BRICS trade alliance, which is a partnership of countries that aims to reduce global dependence on the dollar. This push away from the dollar isn't just about economics, it's about survival. Because the U.S. controls the SWIFT messaging system, that's the email system banks use to send money around the world, and because oil is in dollars, the U.S. can lock any country out of the global economy with the push of a button. We saw this happen to Russia in 2022. That is the ultimate weapon of the petrodollar era. But here's the seismic shift that just happened. In June 2024, Saudi Arabia allowed the 50-year-old petrodollar agreement to expire. They did not renew the exclusive deal. Does this mean Saudi Arabia stopped selling oil in dollars tomorrow? No, inertia is powerful, but it means the exclusivity is dead. Saudi Arabia is now actively selling oil to China and India in yuan and rupees. We are no longer in a mono-petrodollar system. We are entering a multipolar oil market. So here's the million-dollar question. Why are countries that are hostile to the U.S. still trading oil in dollars? Moving away from the petrodollar system isn't as simple as it sounds. If you suddenly switch currencies, you're not just changing payments, you're disrupting contracts, hedging systems, insurance, and pricing models. The U.S. dollar offers high liquidity, meaning that you can move billions without crashing the market, and it has strong legal protections. It's like when Facebook tried to introduce Threads to compete with Twitter. It's not so easy to suddenly get everyone to move platform when everything's already happening on Twitter. But China and Russia are reducing dollar use selectively. Recently, Russia has increased oil trade with China in yuan, it's settled some of its transactions in rubles, and it's reduced its U.S. Treasury holdings. China now promotes yuan-denominated oil contracts, and it encourages trade settlements in yuan with its trading partners. But the key is they reduce dollar use where it's politically necessary, especially under sanctions, while still using it when it's convenient and efficient. It's a gradual shift, not a revolution. But China's strategy to destabilize the dollar isn't just limited to the petrodollar system. It's also using the gold market. You can watch our video to understand how China is using the gold market to break the global financial grip of the US dollar and how it's causing gold prices to surge to unprecedented levels. Thanks for watching. See you on the next one.